COVID-19 has triggered the deepest global recession since World War II, and no country on earth was prepared for such a crisis. The US has lost around 22 million jobs back in March and April. For the first time in its 70-year history, the UNICEF is going to feed poor children in the UK, and all around the world, an additional 207 million people could be pushed into extreme poverty due to long-lasting and severe impacts of the pandemic.
This is Houston. Say again, please.
Houston, we have a problem.
Just as the year ends, recent spikes in infections, a mutation of the virus, and a new round of restrictions across the globe signal a shaky start for the year. Economies around the world are still on life support, but vaccine developments are raising some hopes for a brighter future. Let's have a look at how global growth and markets are expected to perform and what the risks and opportunities are.
We're expecting the global economy to expand at its strongest pace in over 40 years.
One of Wall Street's biggest banks, Morgan Stanley, expects a V-shaped recovery and a global growth of 6.4% for 2021. This is huge compared to the 4.2% contraction projected by the IMF for 2020.
Hey, money's only something you need in case you don't die tomorrow, isn't that right, Carl?
Bigger economies mean more money, more demand, people buying goods, rising business investment, and thus more jobs. Of course, there are dangers that the very unusual year we had might just prevent a usual recovery and lead to an uneven one.
Other economies which perhaps have slower access to the vaccine, that process will be much slower.
Thanks to extraordinary actions taken by central banks who slashed interest rates and introduced emergency bond buying programs, the stock markets reached all-time highs in 2020.
Ooh, that's a bingo!
Especially successful were the stay-at-home stocks, which were the biggest winners. And in 2021, sectors vulnerable to the pandemic, such as travel, oil, and services, are all expected to flourish.
Now, one of the biggest risks for financial markets in 2021 would be if central banks tighten their policies sooner than expected.
High unemployment rates and stubborn low inflation figures might be other risks. Emerging markets are expected to take advantage of the depreciation in the dollar, which is widely expected due to the normality process we might be experiencing. Once the travel sector is back to its pre-pandemic dynamics, the demand for oil is expected to rise, having a positive impact on economies that are highly dependent on oil exports. Looking back at 2020, we should still be worried going into 2021, and some experts are already warning us that the real challenge will be 2022.
The problem is going to be in 2022 when the base effect stops and the economies go back to a level of very weak and unproductive growth.
My mom always said life was like a box of chocolates. You never know what you're going to get.